Right, welcome everybody to this week's session of trading or learning to trade with Krishak. I can see that Krishak is on the call. I can see Mahir is on the call. So I'm going to invite Mahir to just speak a little bit about our educationist, trainer, teacher, whatever you want to call him. He is phenomenal in what he does, and I will allow Mahir to do that for me. So there you go, Mahir. Thank you for joining today. And I'm sure, I know Krishak has been studying and been giving some kind of exam. So it'd be good for the audience to understand a bit more and also understand your journey as well. Thank you.
Thank you, Shazia. Thank you again for hosting. Your leadership and everything you do is greatly appreciated. Hello to everyone on the call. I know we don't have too many, but you know what? Um, that doesn't bother me at all. Even if we had one person on this call, we it just takes one to make a difference. If we could change one person's life, we've accomplished our goals. And so it's about the quality, not the quantity. You guys are the dedicated ones. Paola, you're always here with us on every call, every Zoom, every webinar. I'm about to send you a message to acknowledge that. So yes, Krishak has been preparing for an exam. He could probably tell us a little bit more, but he's taking his degree to the next level. He's going to be one of the top in the forex industry as far as knowledge, as far as degree and qualifications is concerned. So for everyone on this call, we're learning from the best of the best. At a young age, he's already accomplished so much with a degree from university, being a pilot, and probably things you didn't even know about him. I know my son and him talk a lot about cars. They love fast cars. But beyond all that, he's an amazing instructor. He has the discipline, the focus, and the patience to be and is one of the best instructors that I've dealt with. And I say that being an instructor myself, I know a good quality instructor when I see one. So he teaches with patience. He teaches at your pace. And he quizzes you. So it's very important for you to pay attention. If you're his student, he will call you back and ask you questions. And then, the only way you can really know as an instructor if the student has learned is by asking them questions that you've taught them. And, there is no such thing as a silly question. So take it as basic as you want or at any pace you want. He will follow along and teach you with the mindset of a master force instructor. So I want to present Krishak to go ahead and take the call and go ahead and lead us through today's session.
Hello, everybody. I really appreciate it, sir. Yes, I know we've been, we did have a lot of sessions, and we have come a long way. You have been practicing really well, and it's always great connecting with everybody on the call, on the webinar. Thanks a lot, everybody, for showing up. Yes, I've been appearing for an exam. Well, I recently appeared for an exam. It's called CMT, Level 1. It's called Chartered Market Technician. And what this exam is all about is taking technical analysis to the next level. It's about understanding technical analysis and a tad bit of fundamental analysis in more in depth of how the markets are moving, how the money is moving in the financial markets to step up your trading and investments as well. It is not a course that is focused only on technicals, which is for trading, but it is also a course which is focused on investments as well. Different types of assets. How can you leverage? How can you make money out of it? What should be your risk? Um, which all markets are there in the financial world? So these are the few things that you learn with level one. And as you step up for level two and three is where you learn technicals, strategies, so on and so forth. So I will be appearing for all the three levels, and I hope I clear all the three levels in the next 2 years, uh, because the exam is usually twice a year. So yeah, again, it's limited in number, and um, it's a very important exam. It's one of the best examination anybody could appear in terms of financial literacy, in terms of technicals and fundamentals as well. Well, I think we can begin the session. Let's not waste any time. If anybody can help me, what did we look at in the previous session? And we could do a little bit of a recap. By then, I can share my screen as well.
I'll remind you, Krishak, we reviewed the asset classes and we looked at stock market, the fluctuation, and again, somebody asked the question of S&P 500 and the top 10 companies. So we looked at some of those. We reviewed the advantages and disadvantages of leverage and diversifying stocks, high risk, high reward, etc., the spreads. And then we retouched back on just gold and bonds. And then you went into Forex and crypto because they were the ones that we hadn't touched on previously. And you talked about the active market, the debt market, and elements of technical fundamentals, reading the new, what is which. So fundamentals, I remember, I think Maher came on and you put him on the hotspot to ask him. And it was the fundamentals, reading the news, economical news, unemployment, that impacts that. And the technicals were the history. What does history, does it repeat? So does the price analyze the past price to predict the future price, indicators, and so forth. And that is what I have. And I believe we're going to go deeper into maybe technical fundamental analysis and again, it's just moving forward from there. So anybody in our audience, if you can also put comments into the chat as to where you are and so that's then Krishak can take learning forward from there. I hope that helped, Krishak.
100%. I appreciate. And yes, we will be continuing moving from there. If anybody has any questions, feel free to ask me, and then we can move forward. Any questions, folks, regarding the previous session in terms of leverage, lot size, and so on and so forth? Gold, commodities, bonds, where to invest, where not to invest, how to invest, what's the plan for the next year? Anybody would like to sort of have an idea how could the markets be in 2026? Again, we cannot really predict how the markets could be, but based on how the economy is performing, how the fundamentals are, we can at least try to analyze what the markets are up to. Also, keep in mind we do have Bank of Japan interest rates coming out in a couple of hours. The interest rate again is a fundamental news event, so this would be the main focus for this session would be the interest rate for the Bank of Japan. How would it impact the Japanese yen? And as we move forward, we will be focusing more on learning about Forex. What is foreign exchange? How does currency pairs move? And ins and outs of foreign exchange. So yeah, I assume I don't see anything in the chat. If there are any questions, I don't see anything. We can, I think, keep moving forward. All right, let's take a deeper dive into technicals versus fundamentals. We did touch base on this in the previous session, but just to give you an overview of what the topics are. Now, when we talk about technical analysis is more of chart reading. It's more of candlestick reading, analyzing the past data to predict the future. Chart work. Everything is on the charts. Technical analysis is everything is on the chart. You learn how to read charts. You learn about technicals. You learn about indicators. Um, you learn about indicators. There are different types of indicators like moving average, MACD, you have RSI, relative strength index. These are the different indicators that we will be learning more in depth about. Again, we cannot 100% rely on indicators because they are called indicators for a reason. Uh, our main focus is going to be on candles plus volume. This is going to be our main focus, candles plus volume. Indicators will be used as an extra confirmation. Indicators will always be used as a form of extra confirmation or not as the main strategy. So this is all about technical analysis. When we talk about fundamental analysis is more of reading the news, reading the numbers. It's a numbers game. It's trading investment again, it's a numbers game after all. So fundamental is 100% as important as technical analysis. Um, we look at annual reports. We look at annual reports. We look at unemployment data. We look at interest rates. We look at inflation. Uh, these things is all fundamentals where you understand how an economy is performing. So we could say it's economy based. So you learn about how a country's economy is performing. And this is all on numbers, right? Let's jump straight to what's happening with Bank of Japan's interest rates coming out in a couple of hours. Now, the Bank of Japan's current interest rate is sitting at 0.5%. Now, what is interest rate? Let's talk about what interest rate is. Interest rate is nothing but loan or interest on the money borrowed from the bank, from the government or bank. This is interest rate, right? Interest rate is money that you borrow from the bank or the government. It could be your personal loan, it could be a card loan, it could be an educational loan, it could be any kind of loan. Now, the Bank of Japan says their current interest rate is sitting at 0.5%. This is their current interest rates. They would like to increase the interest rates to 0.75%, which is an increase by, which is an increase by 0.25% or 25 basis points BPS. What would happen to the Japanese yen? Will it go up or down? It will appreciate in value. If anybody would like to give me an idea, why would Japanese yen go up in value? Any idea why would the government is increasing the interest rates? What is the main reason behind the government increasing the interest rates? Is it because there is less cash flow coming in for the Bank of Japan, for the Japanese government? Or are they going in more depth where they have to repay the loans which they took from different countries? What is the main reason? If anybody could just give me it again, uh, it doesn't have to be right and wrong. This is for our information that we are discussing. Uh, and I would like to make this session as an interactive session, so anybody can jump on the call and yeah.
I would say that to combat inflation, to make things a little bit more expensive, would be one
Hmm.
reason to raise interest rates. And when that happens, um, other countries look to uh, invest in those countries, which will help the Japanese yen increase in value. That's my input.
Okay, 100%. It's right. And um, what happens when the Japanese yen increases when the Bank of Japan increases their interest rates? What happens to the US dollar, sir? What do you think? What can happen to the US dollar?
It weak. I would say if you're trading, if you're doing the USD Japanese yen, as the increase value in the yen, the dollar would obviously decrease in value. So in that, in that scenario, you would you would decide to place a trade based on the increased value of the yen, which is a short trade. Yeah,
Shorting the US dollar?
shorting the USD JPY, you short it because the value of the JPY increases.
That's 100% correct. You're 100% right, sir. What happens when the Bank of Japan increases their interest rates is they appreciate in value. Things become a bit more expensive. And to combat inflation as well, as what sir said, is to combat inflation, where where the Bank of Japan inflation is currently at 3%. Uh, when you look at the interest rates for the Japanese yen, the inflation is sitting at 3% right now. Is to combat the inflation to improve the domestic economy as well and pressure from the markets and the political leaders as well. Now, there is something more to it, right? There is something more to it. It's not just based on inflation interest rate, but there is something called as, let me Japanese or impact on carry trades. What is impact on carry trades is for several years, and this is around the world, for several years, each and every country has been borrowing money from Japan because of their low interest rates. Because the interest rates in Japan is so low that everybody, or most of the countries, have been borrowing money from the Bank of Japan because of interest rates being so low to a point where the interest rates were negative last year in the year 2024. The interest rates were negative. What happens if the interest rate is negative? There is technically no interest in the country. This is what it means. Now, what happens when you talk about carry trade is borrowing in low yield, yen to invest in higher yield assets. When you borrow money from a country that has low interest rates and then you invest in assets that technically grow, high yield assets can be commodities, stocks, so on and so forth. It gives a very big incentive, right? So rising Japanese rates can reduce this incentive. Technically, when the Bank of Japan increases the interest rates, the incentive becomes lower because now anybody who has borrowed money from the Bank of Japan has to repay with a higher interest. So this is the reason why the Bank of Japan it is not because the economy is getting weaker. Of course, they have to take care of the Japanese economy as well. But one of the main reason is the impact on carry trades that a lot of governments or a lot of countries that have been taking advantage of the Japanese yen, and increasing in interest rates technically increases the value of Japanese yen. The current value of USD to Japanese yen as we speak right now is 1 USD equals to 155 Japanese yen. This is the um, value right now. And yes, Mr. Maher sir is a really good student. As you know, we've been discussing a lot about technicals, fundamentals. He's right on track. Uh, we did discuss a lot about fundamentals, if you remember, sir. Interest rates, inflation, how it's impacting the markets overall. Even with Trump tariffs, Bitcoin, whereas crypto markets fell from 125,000 to it is currently sitting at, I assume, 85,000 US dollars of Bitcoin.
Jack, thank you for that comment. Um, if I can just repeat the carry trades, if I can maybe simplify it to a very
Sure.
basic elementary level. Um, in this scenario, how it carry trades, how it pertains to forex. Am I correct in saying you would sell a currency that has low interest rates to buy a currency that has high interest rates? Correct.
That is 100% right. Yes, sir. You're right. Yes. Now, when we talk about, again, it's not just about selling or buying a currency, it's more about the assets, high yield assets. High yield assets could be commodities, right? Wherein the markets are moving in a very drastic way. And of course, there's something called as bond appeal as well, where higher Japanese yields make Japanese government bonds much more attractive, not for domestic investors, but also for foreign investors. So this is one of the reason why the Bank of Japan is sort of focusing on increasing their interest rates. Well, I would like to share the other screen so that let me see. Oh, I think you can see my other screen as well. Okay, perfect. I'm gonna zoom in and show you what's been happening. This is on fundamentals. This is not technical. This is on fundamentals, and fundamental is a very important part of trading as well. A lot of people neglect fundamentals, thinking chart work is enough, charting is enough, technicals is enough. No, when we are in the business, we need to learn each and every aspect of trading and investment. Trading is not just on technicals, it is on fundamentals as well. And fundamentals does play a huge role when it comes to trading. So it's very important to know macroeconomics of how the economy is performing. Unlike stocks, where you need to know each and everything of a company that you're invested in, whereas Forex is very simple. You just focus on 4 to 5 major important points of a particular currency and see how it is being impacted against the other currency like the US dollar, or it could be Swiss franc, it could be euro, it could be British pound, so on and so forth. So this is what we're going to look at: Bank of Japan policy rate. So the current rate is sitting at 0.5%, and they're forecasting it to increase it to 0.75%, which is an increase in 25 basis points. Let me show you a graph over time. Okay, this is the graph. Uh, yep, this is the graph. If you look at the graph, what does the graph say is back in 2016, 2017, all the way till Jan 2024, the interest rates for the Japanese yen were negative 0.1%, meaning a lot of countries were interested in borrowing from Japan at a very low interest rates, and invest in assets in their country to get higher incentive. And from March, you can see how the Japanese yen started to increase interest rates to point 0.1, point, point 0.1, 0.25, 0.25, 0.5, point 0.5. This Jan of 2025 is when they increased interest rates to 0.5%. And in the month of December, which, in a few hours, we're going to see this numbers even go up to 0.75. Well, this has never been done in history with the Japanese yen. So this is the first time that we're going to see how the Japanese yen is going to increase the interest rates and how it is going to affect the market. If anybody would like to know how will it affect the crypto markets, because yes, somebody did ask me a question about how would interest rates affect the crypto markets, is Bitcoin will be bearish, meaning going down for some time because Japanese yen will appreciate in value. As Japanese yen appreciates in value, what happens? Buying becomes a bit more expensive. Anything that you buy becomes a bit more expensive, right? And Bitcoin, if you look at the chart of Bitcoin right now, let me quickly go to Bitcoin on my other screen. Bitcoin is already been taking this into account right now. You can see how Bitcoin fell from 90,000 all the way down to 85,000. $5,000, 4,000 to $5,000 drop in price just before the interest rates coming out. So anybody who's holding crypto, anybody who's short selling crypto, anybody who's buying crypto, this is for your understanding that crypto markets will be bearish, will be going down for a couple of hours, and then the market will again. The US dollar is not going to let uh, the Japanese yen appreciate in value a lot because again, the US dollar is one of the most dominant currency in the world, not the most valuable, but the most dominant currency in the world. And the US government will definitely take care of it as well, saying that uh, USD to Japanese yen rate is not going to be close enough.
So, because you just made that comment about the US dollar, I recently had somebody ask a question. Why, and it's a question I asked you at the beginning of our training, why is every major currency paired with the US dollar? Why is every currency pair has the US dollar in it? And your answer back then, if I remember, is because it's the world's reserve currency.
That is correct. It is the world's reserve currency. Any trade that you see around the world happens in US dollar. Uh, Russia-Ukraine war, when the war was going on, the transactions of weapons, when any country used to buy weapon from the US, the trade deal never happened in Russian ruble. It always happened in US dollars. Oil, right? When the countries were buying oil, the trade deal always happened in the US dollar. Now the times have changed. That is why the US dollar is weakening because people are focusing more on BRICS. Uh, People are focusing more on using their own currency and not the US dollar. And that is where the picture of tariffs came in the markets where a lot of countries have to use the US dollar. Because again, if they use the US dollar, that means the money is getting used, the money is rotating around the world. And this is what appreciated the value of the US dollar out a lot and being the reserve currency and of course one of the most dominant currency in the world. So, yeah, anybody who's holding crypto, this is just for your understanding how the crypto markets is going to be for the next couple of hours. Uh, Again, we cannot really predict what's going to happen tomorrow, day after a week. But just to give you a bit of an idea as to how the crypto markets are going to perform, is they will be bearish for a couple of hours as the Japanese yen interest rates come out. Moving forward, we can then see the market stabilize because any movement that you see on the chart right now, this all these movements are sharp incline and decline because of the news. Uh, so, yep, the markets are still hovering around. They don't really know what to do, where to go. The markets will give you a better idea or a better direction once the news comes out, which is the Japanese yen interest rates. I hope this is clear. Any doubts with interest rates, any doubts with the fundamentals, any doubts with crypto? If anybody has any doubts with crypto, feel free to drop them in the chat box. Let's give it a minute if anybody would like to ask something. If not, then we can move forward. All right. I think I don't see anything in the chat box. Let's move forward. All right, let's move forward. Um, we did in the beginning we did discuss about a few websites for fundamentals. Since we are discussing more on fundamentals, let me bring those two websites uh, up again, which is Forex Factory and the other one is FX Street. These are the two best websites to track fundamentals, news, uh, and a lot more other things when it comes to the fundamentals of any currency or even Bitcoin for that matter, or even stock market. But these two websites, they focus more on the foreign markets, the foreign exchange, meaning dealing with currencies. Uh, and this is something that I have been using for the past couple of years whenever I look at whenever I look at the websites, I always get a deep insight on how the markets are performing, what's happening around the world in terms of fundamentals, so on and so forth. Let's move ahead. Let's look at, let's now deep dive into technicals because technicals is going to be the main focus. So let's talk about assumptions and technical analysis. Moving forward, assumptions and technical analysis. Anybody would want to give their shot as to what assumptions is in TA is in technical analysis is. It could be anything. What is technical analysis and what are the assumptions in technical analysis? Anybody? All right. Let's talk about assumptions in technical analysis. Pri Price always respects supply and demand zones, right? Meaning, what does this mean is how does the price move? Price will always move through the forces of supply and demand, right? So we could also say that price moves through force force of supply and demand, right? Now, when we talk about supply, let's talk about supply. What is supply? Supply is when there is a lot of selling pressure. When there's a lot of selling pressure, people are selling in the markets. Like Bitcoin. People are selling Bitcoin right now because there's a lot of supply in the markets. Why? Because of fundamentals. The fundamentals, crypto is news driven. Crypto is heavily news driven. Um, how about the US dollar? The US dollar is also selling. It's under selling pressure right now. There's a lot of supply coming in the markets because of inflation, interest rates, um, so on and so forth. So when they say that there's a lot of supply coming in, meaning there are more sellers than buyers, whereas demand is where you have more buyers than sellers. Demand is what drives the price up, sellers is what drives the price down. So when we talk about supply, let me push this down. Price goes down. Demand is when price goes up because the demand is increasing. People want to buy. And this could be for anything. It is not just related to finance or it is also related to real estate. For example, real estate is also a form of investment. It is not a liability, it is a form of investment where if if you buy a property, there are limited units. When you buy any property, there are limited units. as you buy the property and as you hold the property for long term, the property always appreciates in value because there are more home sales happening. So the demand is increasing. People are taking more home loans because they want a house to live. Um, how long are they going to rent up until, right? Even if somebody buys a house, they give it on rent, saying that I would like to put my house on rent. It could be Airbnb or they would like to rent it out, so on and so forth, where they could generate passive source of income. So is it a liability? No, it is an asset, right? Wherein the homeowner is earning the money. They are earning passive income. So what happens? Demand increases because we are 8 billion people on Earth. Everybody needs a house to live. Everybody needs a roof. So people say the housing markets are going to crash. The housing prices, the housing markets are overvalued. The prices are overvalued to a point where we can say that the markets will crash, but will also recover very quickly. What happened during pandemic? Pandemic was one of the best examples where, yes, the markets were under recession, but as the year goes on, as the year goes by, you see the market started to, the home sales started to go up. People were buying more homes, so they're buying more houses, so on and so forth. Now the interest rates for the US is even lesser. When the interest rate is down, you will see a lot of people buying more houses as well. So the spending is going to increase. When the spending increases, that's where the money flows. That's where the US dollar flows. So everything in finance is interconnected. It is not just about one particular thing, but everything in finance is interconnected. It depends on how would you like to diversify your risk. What is your risk appetite? Is it low, medium, high, so on and so forth. So price moves through force of supply and demand. Supply is selling pressure, where you do have a lot of selling pressure, and this is what drives the market down. Whereas demand is where you have more buyers than sellers, and it drives the price bullish or it drives price up. Um, the next assumption would be price. History repeats, we can say history repeats itself, so does price. History repeats itself, so does price. Meaning, if a price has reached to a particular point, it is because it has reached to that point in the past, so the history is being repeated. Meaning, let's look at Bitcoin or let's look at US dollar. Let's look at US dollar chart. If you look at the US dollar chart right now, what's happening with the US dollar is the markets are, of course, going down. When we say history repeats itself, the price has touched 100 in the month of November. Right now, this is not the value of the US dollar. It's just how the US dollar is performing. So let's say the market has reached this particular level. Now, this is a level of supply where you see the price is coming down, right? Where you can see that a lot of sellers are selling. You can see it went up, sellers took control, and the price started to push down. This is the level of supply where you see people are selling. There's a lot of sellers coming in the market. Did the price reach there before? Yes, it did reach the same level back in July 2025. So what's happening? History being repeated right here. This is what it means. As you move forward, as you move step by step, you will always see that if the price is here, it is at this level for a certain reason. Number one, it could be that the price did touch the same level back then. It could be the same year, the same month, 5 years ago, so on and so forth. Um, but yes, price will always come to the same level where it started an initial push, where it went up from initially. It comes back to the same level and does a second push back up as well. I think Mr. Maher sir has a question. Yes, sir.
Yes. So thank you. This is amazing. So I wanted just for the audience and even for myself. So, when you have a pair, you're comparing, we're reading the candles of one currency strengthening, the other weakening, short, long. When you look at a stock and you see the candles, you know that the value of the stock itself is going up in value, it's worth more, or it's going down in value based on the candle. This is the US dollar. The candles, the movement going up and going down is the value of the dollar itself. So can you explain that a little bit further as far what are we comparing the dollar to?
We are not comparing the
Not
dollar to anything because this is just a
correct.
US dollar index. So the what is the meaning of a US dollar index is it tells you how the US economy is performing. This is not a comparison to any other currency pair. It is just US dollar index. It's like S&P 500. What is S&P 500 index? S&P 500 index is tracking the performance of the top 500 companies in the US. It could be tech companies, defense companies, so on and so forth, but top 500 companies in the US. It's the same thing for US dollar. So this here we are not comparing anything. So even if you look at the prices on the y-axis, on the vertical line on the y-axis, this is just the price of how the US dollar is moving up and down, but not a comparison to a different currency.
So the base is, so it says it's right around 100, little over 100, and now it's down in the 90. So what's the base?
98.4.
100?
No, there's no base or quote here because we are not comparing it
Correct.
to anything.
No, no, I understand that part, but like you have an iPhone, it's worth this much. It can be worth more or less. So you're saying the dollar itself can be worth more or less
Of course, yes,
on the
based
index.
on based on the index like S&P 500, based
And
on
I
the
think my
S&P.
direct question is the numbers on the very right, what do those numbers represent? That 100, 99, 99.5, what do those numbers actually represent?
That number just represents that how the economy is currently moving. Meaning, what is the value of the US dollar? It is not a value of the US dollar to link to another currency, like S&P 500. Let's look at a very simple example of S&P 500. Then we can come back to the US dollar index. Now, when we look at S&P 500 index, what is S&P 500 index is it tracks. Uh, the performance of the top 500 companies in the US. So the number that you see here for the index 6,792 is how the how the S&P is moving. Moving to DXY, it's the same. The number that you see here is how the economy is performing, right? How the interest rates is, how the inflation is. Because we need to sort of have a number. We cannot really move without a number. In finance, we cannot really move without a number saying that there's no number, but there's just movement in charts. So having a number attached to any asset is very important because, again, finance is a numbers game. It's always important to have the value. So this is the value. It does not mean this is the value compared to a currency or it is compared to S&P, but um, a value that is for its own as to what is the value of the US dollar as of now. I hope that answers your question, sir.
Thank you, by the way. I greatly appreciate that. And it wasn't more than just for me, but some people were asking me, and I didn't know exactly how to give that response. But that makes perfectly good sense. Yes. And I think we
I
have a
do.
question on the group.
Mm, yes, I do see a question. We can take this question from Ms. Paula. It says, how much depends the trade agreements between the countries? For example, Mexico, Canada, when President Trump says that corn increase the duty, what happens in this case? Very good question. What happens when the tariffs are increased in terms of Mexico and Canada? Um, It really depends on what the president is increasing tariffs on. Is it on import and export duties of certain things, of certain goods and services? Let's say, for example, I'll give you a very quick, this is a very good example, and this is what I used to trade when the US dollar, let me take a different chart. Okay, this is a coffee chart, something very unusual that I used to trade because I'm a heavy coffee drinker. So I like to buy and sell things that I, consume on day-to-day basis. Uh, Now looking at the chart, if you look at this rally right here, this was back in August. This was back in August, right? What happened back in August is uh, on 31st of July or in the end of July, President Trump put 50% tariffs on Mexico on coffee. What happened? The demand increased. Before the what happened was when the President Trump put tariffs on Mexico on coffee, he said that tariffs will be effective from this date. Everybody started to buy coffee at a cheaper rate. When everybody started to buy coffee at a cheaper rate, what happened? The prices went up. This is when I bought coffee. This is when the news came out. This is when I started buying coffee at about 300 US dollars. And I made an exit at about 415, 420. I assume 415. Around about 415 levels is when I made an exit. Uh, Again, holding it for about a month and a half. Right. So this is an effect on tariffs, depending on the goods and services, meaning it could be on batteries, it could be on groceries, it could be on electronics, it could be on FMCG, food and beverage, right? So it depends on what the tariffs is gonna be.
They're
And
gonna
again, the trade. Sorry, Sagon. Yeah.
they're gonna lower the tariffs. If it was already at 50, and then now Trump says, well, now the tariffs instead of 50 is going to be 20. Is that going to have the
Nobody.
opposite effect?
It can have the opposite effect as well. The reason why is now people have already stocked up on this asset for now, right? Let's say people already buying coffee when the tariffs are at 50. When the President Trump puts down the tariffs to 20%, can there be a decrease in demand, increase in supply? Certainly. Why? What happens is they would like to finish their whatever they have bought, whatever the materials they have bought at 50%, they would like to finish it off and then buy it at 20%, right? So there could be some sort of a pause, but that is for short term. There could be short term. There could be a short term pause, but uh, the main reason is when the tariffs is increased, even on China. What happened, even when the President Trump increased tariffs on China effective of so and so date, what happened to the markets? Gold went up, gold skyrocketed. Right? Why? Because Chinese people, anybody again, Chinese people, foreign investors started to buy gold, thinking that the gold is going to become much more expensive. Let us capitalize on that now. As the tariffs decreased with China, gold prices fell almost to $4,000 an ounce, actually, from 4,400 to $4,000 dollars, or for 3,800 as well. So this is an impact that tariffs can have on countries depending on what the agreement is been done. I hope that answers your question. Thank you. Well, I think we do have about 6 minutes. We can move forward or we can take questions if anybody has any questions. All right, I don't see any questions. Let us look at one quick topic in terms of assumptions and technical analysis. We did look at two things when we speak about assumptions and technical analysis is number one, price moves through force of supply and demand. When supply is high, meaning there's a lot of selling happening. When demand is high is when there's a lot of buying happening. People are buying and the prices appreciate. So when uh, the President Trump put 50% tariffs on Mexico, what happened? The demand increased. As the demand increased, people start to buy more coffee. Uh, and this is what increased the price of coffee back in August 2025. All right, let's move to one small topic that we can look at is anatomy of a candle, is how a candle formed. When we look at a candle, there are two kinds of candle. One is called a bullish candle, and the other one is called a bearish candle. Caesar said raw materials too, 100%. It can be raw materials as well. Yes, you're correct. There are two kinds of candle. One is a bullish candle and one is a bearish candle. Bullish candle is always green in color. It's a green candle. Bearish candle is a red candle. This, bear with me, I'm just going to draw a candle for you folks. Okay, this is how the candles are. Uh, One is a green candle, which is a bullish candle, and one is a red candle. Both the candles have two components and four data points. The two components are body and the wick. Body is the open and the close. Wick is the high and the low. The four data points are going to be open, OHL, C. C for close. These are the four data points. As the candle opens, the candle always opens at a lower price. A green candle always opens at a lower price, creates a low, which is lower than the opening, creates a high, higher than the opening, and close higher than the opening as well. Let's say if a candle opens at $10, goes down, creates a low at $8. So the low is below its opening because it opened at $10, creates a low at $8, comes back up, creates a high at 15 and closes just below the high. This is how a candle is formed. So the low and the high are the wick. The body is the open and the close. Looking at the red candle always opens at a higher price, closes at a lower price, creates a low and a high. The positioning for a red candle and a green candle, the low and a high is going to be the same. The only two data points out of four data points that are going to change is the open and the close. The high and the low are going to be the same irrespective of the color of the candle. Anybody can take a screenshot of this if anybody would like to take a screenshot of this. Well, I think we can wrap this session up here. If anybody has questions, folks, feel free to answer your questions.
I think we're good. You did a great job of explaining, and that's why nobody has questions.
Thank you, sir. Thanks a lot. I appreciate it.
Right, Shazia?
It's just comments like Caesar said, and the raw materials too. But I guess no one's got any specific questions, which is I guess the concentration is there. That's what I find as well.
Yep. I don't see any questions as well. Anybody else would like to ask about investments or trading in general? Feel free to do that as well, or I think we can wrap up the session, Shazia. That's okay.
Yeah, thank you, Krishak, for your in-depth session today. I'm sure everybody's absorbing the content and the information that you shared, and they have got a better understanding of looking at different charts. Thank you, Paola. She says thank you. So I guess today was quite a lot of exposure to different types of charts. I found the coffee chart quite fascinating because it's not something that I would normally look at. Thank you, Judith, as well. So thank you, Krishak. I believe we're on time, 7 p.m. So thank you everybody for joining us. Just a reminder, next week and the following week, we will put a flyer out. There will be no session because next week, if I'm correct, is the 25th of December, and the following is the 1st of January. So we will be back in the following week with the next 3 sessions of the webinar. So thank you all, and have a happy festivity, holiday with your family, or however you choose to celebrate, and stay blessed. Keep learning, keep joining. We get inspired by your motivation when you come on. And thank you. I want to say special thank you to all of you who joined today. I see some similar names, and please invite your friends. If you've benefited, make sure you allow somebody else to benefit too. Mahir, anything you'd like to add before we close today?
No,
It's the last call of 2025.
I know. That's amazing. So great call, as usual. Amazing, Krishak, Shazia. Thank you again also for your leadership and hosting. Thank you everyone for being on here. Share this opportunity with everybody. Bring more people on board, your friends or family. They don't have to be a part of QBN to be a part of this webinar. Okay, so it's open to everyone. So the more the merrier, like they say. And and I'd like to go ahead and take this opportunity and say that we're having our mindset. Shazi and I are co-hosting a mastermind mindset on Wednesdays. And then we're taking 2 weeks off as well. We had one yesterday about mastering your inner voice, but also please join those if you're not joining them as ready, and again, bring people to those. So have a wonderful holiday season, everybody, and look forward to staying in touch. And God bless you.
Thank you.
Thanks,